Arbitrum, Ethereum's layer 2 titan. What if I told you one of the most underrated altcoin plays of this cycle may already be under your nose, and most people haven't even noticed it? I'm talking about Arbitrum, Ethereum's layer 2 powerhouse. Despite massive adoption, network upgrades, and very strong developer activity, ARB is still trading well below its January 2024 highs, down around 80%. And that gap between infrastructure growth and price, that is opportunity knocking. Welcome back to another episode of JRNY TV. My name is Nick, and this is where we break down the very complex world of digital finance so it's not so complex for everyone. And today, we are breaking down the one and only Arbitrum. What it is, the problems it solves for Ethereum, its roadmap that includes the upgrades like Stylus and Arbitrum Orbit, the token dynamics behind ARB, and why it could be the prime layer 2 play heading into the next altcoin season. This is not hype. This is infrastructure meeting adoption. If you've been watching Ethereum's gas fees rise, DeFi activity stall, or maybe other rollups struggle with user experience, you know layer 2 scaling is urgent. Arbitrum is already processing more dApp activity than nearly every single chain except Ethereum itself, creating a real moat. When token price growth eventually catches up with the fundamentals, the early positioning, it could pay off. What Arbitrum is and why it matters. At its core, Arbitrum, it solves Ethereum's scalability problem. Ethereum handles roughly 20 to 40 transactions per second, and fees, they can skyrocket during network congestion. Yeah, too much. Nobody likes those gas fees. However, Arbitrum steps in and is Ethereum's top layer 2 solution. It bundles multiple transactions off-chain and anchors them back on-chain in a single compressed batch. This optimistic rollup model, it slashes costs, it boosts speed, and it retains Ethereum level security, even under a heavy load. Arbitrum is already thriving in the real world. The total value locked, known as the TVL, it has reached $3.39 billion year to date. Daily activity addresses are now surging, and the network now handles nearly 2.9 million transactions per day. That's not idle activity. It is DeFi trades, it is NFT minting, it is gaming interactions, and is staking operations, all moving at a fraction of Ethereum's cost. Compared to other layer 2s, Arbitrum dominates. Optimism, for instance, it trails significantly in TVL, daily active addresses, and transaction volume. Arbitrum has established itself as the main hub for Ethereum's layer 2 ecosystem, thus making it indispensable for both developers and users alike. Fast, secure, EVM compatible, and with real adoption, it is foundational for Ethereum's next wave of applications. Arbitrum's roadmap, next level upgrades. Looking ahead, Arbitrum's roadmap is ambitious, and it is definitely designed for long-term growth. The Stylus upgrade is a game changer, allowing developers to write smart contracts in Rust, C++, and compile to WebAssembly alongside Solidity. This opens the platform to a broader developer base that previously was not participating in Ethereum scaling. Arbitrum Orbit is another major development. It allows teams to deploy their own layer 2 or layer 3 rollups with full access to Arbitrum's bridges and tools, including Stylus support. Whether for gaming, DeFi, or specialized enterprise networks, Orbit enables faster, more sovereign development without reinventing the wheel. On governance, decentralization is the goal. The sequencer, a currently centralized piece of infrastructure, it could evolve into a multi-sequencer system or implement leader elections based on ARB staking. The Arbitrum DAO continues to run Security Council elections and has allocated $14 million in ARB to fund security audits across the ecosystem. Stronger security, better decentralization, and expanded developer support, that makes Arbitrum's next phase robust and resilient. Arbitrum, token dynamics, and opportunity. Now let's get real with it about the Arbitrum token. Currently trading around 52 cents, Arbitrum sits roughly 78% below its all-time high of $2.40 from early 2024. And that discount alone is compelling. But there is more than just price action here to consider. Arbitrum has a fixed total supply of 10 billion tokens, with about 51% in circulation. The remaining tokens are gradually set to be unlocked through scheduled vesting events stretching into 2027. Monthly unlocks, roughly 92 million ARB, are predictable and spread out, which helps the market actually absorb supply without triggering sudden dumps. When you combine discounted pricing with Arbitrum's dominance as Ethereum's top layer 2, ongoing upgrades like Stylus and Orbit, and strong developer traction, Arbitrum looks positioned far ahead of the curve adoption. Long-term investors, they may see ARB as a high conviction hold, buying infrastructure and future tooling at a price discounted by timing and vesting uncertainty. Why Arbitrum could outshine in the next cycle. Arbitrum's adoption story is very strong. The network is integrated with giants like PayPal and handles massive DeFi flows through platforms like Aave. Unlike speculative tokens, ARB's value grows as real activity continues in the network to grow. Transactions, contracts, tokenization, and gaming, they all consume ARB, creating natural demand. Supply mechanisms, they further strengthen the case. Staking and DAO allocations remove ARB from circulation, creating supply pressure. And as the ecosystem continues to expand, this feedback loop, it could translate into meaningful price appreciation, especially during altcoin season when infrastructure plays typically outperform hype-driven assets. The broader crypto market, though, it adds tailwinds. Bitcoin and Ethereum ETFs, they continue to pull in institutional liquidity, and Layer 2 scaling solutions are increasingly critical for Ethereum adoption. With upgrades like ARBOS, Stylus, and Arbitrum Orbit, the network is now preparing for widespread developer and enterprise adoption. ARB is positioned as a core asset in the Ethereum Layer 2 ecosystem, ready to capture significant upside as adoption scales. Is Arbitrum worth holding? Here's the bottom line. Arbitrum isn't just another altcoin. It is infrastructure for Ethereum's future. With Layer 2 dominance, enterprise adoption, and major upcoming upgrades, the network is now setting itself up for long-term relevance and growth. Arbitrum sits at the center of all of this ecosystem. It fuels transactions, it secures the network through governance and staking, and scales with developer and user adoption. Tokens with this kind of adoption story, they typically outperform during bull markets, especially when altcoin season rotates liquidity toward real infrastructure plays. Remember, those undervalued infrastructure projects, they often become the parabolic winners. Arbitrum, it combines discounted pricing, network dominance, and a very strong roadmap, making it one to watch. So the question now is simple. Will you be positioning yourself early, or are you going to be waiting until the crowd catches on? Please be sure to drop your thoughts in the comments below, and let's get this conversation started. Are you planning to hodl Arbitrum, or do you have your sights set on a different project? Thanks again for watching JRNY TV. My name is Nick, and as always, remember, the future belongs to those who start preparing for it today. We will catch you in the next one.